disbursement facility remained low during 2024-25, that is in the current year so far. Now, mirroring the liquidity dynamics which I just explained, the weighted average call rate, that is WACR, on an average remained close to the middle of the corridor. Now, I have explained, I mean, for common listeners and for others, I have explained what exactly the corridor means in the footnote. And let me also state here that lot of, most of the statements which I am making are backed by data, and the data is given in the footnotes, and I would encourage you to have a look at footnotes to understand why we are making certain statements. So mirroring the liquidity dynamics, as I said, the weighted average call rate, that is WACR, on an average remained close to the middle of the corridor. Across the term money market segment, the yields on certificates of deposit, that is CDs, commercial papers, that is CP, issued by non-banking financial companies, that is NBFCs, and 3-month treasury bills, that is T-bills, also eased. In the credit market, monetary transmission remains ongoing. As you would be aware, the Central Board of the Reserve Bank decided to transfer rupees 2.11 lakh crore as surplus to the central government for the accounting year 2023-24. As the economy remains robust and resilient, the Central Board decided to utilize this opportunity to increase the risk provisioning under the contingent reserve buffer to 6.5% of the Reserve Bank's balance sheet for 2023-24 from 6% in 2022-23. In other words, the contingent reserve buffer, which was 6% in 22-23, was enhanced by the Central Board to 6.5% in the current for the year 22-23. Now, this risk provisioning, that is this provision for contingent reserve buffer, or CRB as we call it, this would further strengthen the Reserve Bank's balance sheet. Prudence is at the core of our standard operating procedure. The Indian rupee moved in a narrow range with a low volatility during 2024-25 so far, that is up to June 5th, and that's the figure I have given. Now, this has happened despite the rupee trading under pressure amidst foreign portfolio, that is FPI outflows. The relative stability of the Indian rupee bears testimony to India's sound and resilient economic fundamentals and its macroeconomic and financial stability and improvement in the external outlook. Looking ahead, the Reserve Bank will, and I'm providing some kind of a forward guidance here with regard to liquidity and our approach to the markets. Looking ahead, the Reserve Bank will continue to be nimble and flexible in its liquidity management through main and fine-tuning operations in both repo and reverse repo. We will deploy an appropriate mix of instruments to modulate both frictional and durable liquidity so as to ensure that money market interest rates evolve in an orderly manner which preserves financial stability. As our actions over the recent period have shown, the Reserve Bank stands committed to maintain stability and orderliness in all segments of financial markets and institutions regulated by it. I would like to read this sentence once again for clarity. And it's not just for clarity, but to reiterate the position. As our actions over the recent period have shown, the Reserve Bank stands committed to maintain stability and orderliness in all segments of financial markets and institutions regulated by it. And this is consistent with our approach, which we have been adopting. Even during COVID times, we adopted the same approach, and thereafter we have continued. So therefore, our focus is to ensure stability and orderliness in all segments of financial markets and institutions which are regulated by the Reserve Bank. I would now turn to financial stability. The annual financial results of 2023-24 indicate that the banking system remained sound and resilient, backed by improvement in asset quality, enhanced provisioning for bad loans, sustained capital adequacy, and rise in profitability. The non-banking financial companies, that is NBFCs, also displayed strong financials in line with the banking sector. Notably, the gross non-performing assets, that is the GNPAs of scheduled commercial banks and NBFCs, are below 3% of total advances at the end of March 2024. It is important that regulated entities should continue to improve their governance standards, risk management practices, and compliance culture across the organization. In November last year, we had flagged certain concerns on excessive growth in unsecured retail loans and over-reliance of NBFCs on bank funding. Recent data suggests that there is some moderation in these loans and advances. We are closely monitoring the incoming data to ascertain if further measures are necessary. The boards and top management of regulated entities should ensure that risk limits and exposures for each line of business are kept well within their respective risk appetite framework. The persisting gap between credit and deposit growth rates warrants a rethink by the boards of banks to re-strategize their business plans. A prudent balance between asset and liabilities has to be maintained. Customer protection remains on top of the Reserve Bank's priorities. In general, we have observed that the guidelines on key fact statement, in fact, I have explained key fact statement also in the footnote. The customer protection, as I'm just repeating, customer protection remains on top of Reserve Bank's priorities. In fact, it would be of interest to you that in this year's annual report, we have a separate box item which lists out the customer-centric measures that the Reserve Bank has taken. And in the same vein, we have also a box item in the annual report which has just been released recently. There is a box item on the number of regulatory measures which were taken after carrying out stakeholder consultations. And these two box items, I would encourage those who are interested to please have a look at them. So in general, we have observed that the guidelines on key fact statement are followed, but a few regulated entities still charge fees, etc., that are not specified or disclosed in the key fact statement, that is KFS. It has also been observed that in some microfinance institutions and NBFCs that the interest rates on small value loans are high and appear to be usurious. The regulatory freedom enjoyed by the regulated entities in respect of interest rates and charges should be used judiciously to ensure fair and transparent pricing of products and services. The Reserve Bank continues its constructive engagement with such financial entities to safeguard the interest of customers and ensure overall financial stability. Now let me make it very clear that we are observing all these trends, and our focus is always to interact, to engage with the sectoral players, to engage with the individual banks or NBFCs or the MFIs, and encourage them to take necessary corrective measures, because it's for the regulator and the regulated entities together. We have to work to ensure that your health, that is the health of the banks and NBFCs and the microfinance institutions, remain robust, the health remains good, and if that happens and when that happens, it's good for the economy. I'm not saying that there is any big amount of problem at the moment. Overall, as I have said, let me again re-emphasize, the banking sector, the NBFC sector, the MFI sector, overall financial sector remains healthy and stable. But there are a few outliers, and I was mainly focusing on them. Let me now turn to the external sector. With lower trade deficit, robust services export growth, and strong remittances, the current account deficit is expected to have moderated in Q4 2023-24. Services exports were predominantly driven by software exports. Other business services and travel services exports were predominantly driven by software exports.